If you've ever considered retirement, odds are you've probably looked at the numbers, taken a look at how much you need to save, how much you spend, and where you are in the progress report towards those goals. Unfortunately, making the decision around retirement oftentimes requires considerations that go beyond the math. Things around your lifestyle, your health, what you hope to do down the road. In this video, I want to break down what goes into that decision, or at least what should go into that decision, and whether or not the timing is right for you, not only financially, but also personally. By the end, by implementing some of what we talk about in today's video, you should have a good framework to help in making that decision and in ensuring that you're making the right decision if you choose to take that next step towards retirement. Hi, I'm Justin Kuntz, Managing Director of Pacific Wealth Management, helping you make good financial decisions through sound management for a secure future. Traditionally, people have always considered the age of 65 to be the point at which you can retire. You get to that point and it's time to pull the plug. Unfortunately, times have changed. That framework was built way back in the day when the average life expectancy was almost 62 years old, right around the time that government benefits would kick in to help fill that gap for a couple of years when people weren't living that long. Now, people are expected to live into their 70s and even 80s, and to retire at 65 implies at a minimum of 10 to 15, even 25 years potentially of life that needs to be financed and paid for. It's a completely different calculus. So thinking about retirement in terms of a specific age, specifically around 65, for example, is a little bit dated and doesn't make a whole lot of sense in today's day and age. Retirement really should come down to three primary factors: your health, your sense of purpose and what you want to accomplish, and your finances. Let's start with the financial aspect of making that decision. This is a critical one. This is why we're here. A lot of times, that financial decision really comes down to replacing income that you were generating while you were still working. Can you support your lifestyle with a certain amount of income that is generated from various sources? Social Security, pensions, your investment portfolio, even part-time work or a hobby that might generate some income. There are a lot of ways to basically cut that pie up, but at the end of the day, if you can figure out a way to build an income stream that can support your lifestyle, then you're probably financially ready to do so. The challenge is that over the course of time, there's been plenty of people that have basically talked through rules of thumb. The 4% rule is really common, meaning if you can pull 4% of your portfolio every single year to support your lifestyle, that will create a sustainable path towards financial freedom and towards, never running out of money. But unfortunately, what we found as advisors putting these types of strategies to the test is that rules like that very rarely work out and are very rarely successful. Everybody's situation is different. And even in the high net worth category of clients that we work with, who generally have more than $1 million in investable assets, rules of thumb are very rarely appropriate. Everybody has different goals. Everybody has different things that they want to achieve, different hobbies, different income streams, different expenses, different things that come out of the blue that impact their financial life, whether it be a health event or some type of gift or a financial obligation that they weren't previously planning for. You never really know, but at the end of the day, rules of thumb are not a great idea, and it's better to look at your personal situation and do your best to anticipate what might be coming down the road, and using that as the guide to figuring out whether or not you are financially capable of taking that next step and retiring. Once you've developed that framework, then you put it to the test. This is the key. Test it against things like inflation, higher than average inflation. Right now is a perfect example where we live in a world, at least in the United States, where the inflation rate is higher than where it's been in the last few decades. If that persists, can your financial plan survive? Also, things like healthcare costs. Increase in healthcare costs can sometimes mean the make or break dynamic between your financial plan surviving or not. And ensuring that you have the ability to cover any kind of healthcare costs that might come down the road is also critical. For many of our clients, what we do is we build in long-term care scenarios that occur towards the tail end of their life. Can their plan withstand that type of expense without any kind of additional help, like long-term care insurance or whatever it may be? Can their portfolio support it? Another one is market dynamics. So market changes occur. The stock market, the bond market does move in cycles, and it's been on a really good run lately. It probably won't always be good. I think we can all count on within our lifetimes, if we're of reasonable age, that we will encounter a challenging market again. So what happens to your portfolio in that situation? Does it survive a market cycle that means potentially 10 years of markets below where they were before? I think many investors forget what it was like just 20 years ago, 25 years ago, when we experienced the dot-com bubble bursting, or even the Great Recession in 2008, 2009, how long it took for portfolios that were invested in the stock market to come back to their previous levels. When you're retired, the situation is even more complicated because you're pulling money from your investment accounts most often. And if you're doing so when your investments are down or depressed because of a market event, you're making it that much more challenging to bounce back and to recover what you've lost. So can your portfolio, can your finances withstand these various tests? This is a really important piece. Putting it to the stress test is what we call it, and making sure that you can still accomplish the goals that you have in mind. The next primary factor is health and your general well-being. This is a big piece of the puzzle. And to identify whether or not your health is in good enough shape to pull that plug, or frankly, even bad enough shape where you might accelerate that decision around retirement, it comes down to a number of factors. Obviously, there's physical health, but there's also mental health. One concept that's pretty interesting is what's called the U-bend of happiness. And ultimately, that shows that there are trends that occur throughout people's lives. Well-being tends to dip in midlife, actually, then rise again after about age 55 or 60. For many people, that generally means that happiness actually peaks right after retirement. As I'm sure you can imagine, retirement is an exciting time if you're not necessarily loving going to work every day. Hopefully you're able to do things that you enjoy in that next chapter to maintain that happiness. From what we've seen, there are times in which people retire and they do so because they feel like they should, but they don't necessarily have that sense of purpose, that goal to accomplish anything after that point. And they find that life is a little bit less fulfilling than they expected when they don't have work to go to or tasks to accomplish every single day. One interesting study done by the GAMA network found that people over 50 with a strong sense of purpose lived longer over the next 8 years than those who didn't. So, it's not just about mental health, but it sometimes translates into physical health as well. Generally, what we've witnessed too is that the early years of retirement are many times the most active. There's pent-up demand for vacations, activities, trips, spending time with family, and going to see that family. And usually that lasts, for a pretty substantial period of time. But as health becomes the inevitable ticking clock that it is, and ultimately affects people's physical well-being, that tends to slow people down. And generally, we move into another phase that is a little bit less costly in many cases, where it's a little bit slower moving. Spending time with family, getting into the routine of just living life at home rather than traveling is common as well. And so to plan for those two chapters of retirement is another piece that we found to be quite helpful in thinking about the real world application of your expenses. Your expenses are not necessarily going to be as consistent as they were when you were working, when you're retired. You might spend quite a bit more money in the first 10 years of retirement than in the next 10 years or 15 years. So considering how that looks and building that map out for yourself is pretty important. And another dynamic that comes along with that second chapter is the health aspect and what that might bring from an expense perspective. Sometimes with health declines comes increased medical bills. And so we get this other kind of like third chapter where medical bills ramp up, health declines, and all of a sudden you're in a situation in which your spending is even higher than it was in the first chapter. So it can happen in a lot of different ways, but taking a good look in the mirror and understanding what your health looks like physically and mentally before you make a retirement decision is key. Another example I'll just mention around planning for retirement comes down to putting your goals to the test in the context of what retirement really looks like. For example, we have many clients that have a location that they've always enjoyed on vacation, call it Hawaii. And they think about potentially moving to Hawaii in retirement. It's important to remember that when you live somewhere full-time, that lifestyle tends to be quite a bit different and also cost quite a bit different than what your vacation looked like when you were there. And so what we've always encouraged clients to do, whether it be, traveling to a specific location or even doing something like buying a motorhome and traveling within a motorhome, is test it out. Go to Hawaii, live there as if you're not on location, but you're just living your life. You might not be doing as fun things like zip lining and paragliding every single day. You might be just going to the supermarket and grabbing groceries for the rest of the day. Living life as if you were retired as a test is really important. You might learn something new. Sometimes, the concept of owning a motorhome is really great, right up until the point that you try it out for a couple weeks and realize that, maybe it requires a little bit more work than anticipated. Or on the flip side, it might confirm that you love this and this is the best thing you could possibly do in this next phase. And that just reinforces the decision to follow through with that goal even more. So just a number of things to consider as you're looking into the next phase and planning for it. To sum things up with a few key takeaways, first, retirement isn't just about reaching an age or a number. It's about the consideration of a number of factors, primarily your finances, your health, physically and mentally, and your sense of purpose. Second, being financially ready means understanding what your lifestyle costs you or will cost you in that next chapter and ensuring that you can construct an income stream that can finance that or support it. And that income stream might look a lot different than the income stream that you have while you're working. So building that out, figuring that math out is an important puzzle. It's not just about replacing what you were bringing in when you were working. It's about understanding the different dynamics of Social Security, pension, retirement accounts, your other investments, and figuring out if that makes sense for you and your lifestyle at that certain chapter that would be retirement. Third, the emotional readiness aspect, the sense of purpose is critical. Knowing what's next, what would you be doing day to day, what will bring you that fulfillment in life that will keep you going, keep you waking up every single day and pushing through the challenging times that might be ahead. And fourth, the physical health aspect. Obviously you want to ensure that you can enjoy the things that you've set out to do in retirement. So being healthy is obviously a good thing to plan for, and getting into good health is sometimes a priority that is forced to be delayed until retirement. But other times, physical health can be an incentive to retire if it's not looking as good. Maybe there's a reason to believe that you don't have as much time left, and making the decision to basically pull that trigger sooner than later because your life expectancy might be lower than average is another thing to consider. So it goes both directions, but at the end of the day, assessing your physical health is important, and using that to craft what that roadmap of retirement really looks like is the final point to take home and really consider as you're thinking about this next chapter. Overall, retirement works best when it's intentional, it's planned on your terms, and it's shaped within a solid financial plan to allow you to live the life that you want to live. Thanks for watching today's video, and if you're interested in seeing more about how we help our clients get the most out of life with their money, be sure to visit us at www.packwealth.com and check out our other videos where we discuss a number of other financial topics to help you optimize your financial life.